Okay, day 63. Let's just be real. The market is an absolute bloodbath. So instead of panicking, we're going to do what we always do, cut through the noise, look at the data, and see how the Plazm protocol is actually holding up under this crazy stress test. Let's dive in. All right, you know the drill. Quick disclaimer. This is all for educational and info purposes. It is not financial advice. You've got to do your own research. Okay, let's get to it. So first things first, we've got to zoom out. You can't understand what's happening inside Plazm without seeing the chaos happening outside. And yeah, it's a market bloodbath out there. Look, if you're feeling a bit of panic right now, you are definitely not alone. The Fear and Greed Index, it's sitting at 24. That is deep, deep into extreme fear. This isn't some isolated thing. This feeling is everywhere in crypto right now. And it's not just a feeling, right? The numbers are brutal. Just look at Ethereum, the big one, the market bellwether. It's down a whopping 10% today. This is a huge market-wide storm, and pretty much everyone is getting soaked. So with that in mind, let's look at our numbers. Plazm's at 77 cents, down about 18%. eSHARE, $8.64, down 15%. Yeah, it hurts to see, but the most important thing to see here is that we're basically moving right along with the whole market. This isn't a Plazm-specific problem. This is a crypto problem today. Okay, so that's the chaos outside. Now let's ignore all that for a minute and turn our focus inward. Let's talk about the protocol's internal mechanics. Let's talk about the cushion above the floor, the actual mathematical reality of it. And wow, this chart just says it all, doesn't it? Just look at that space. Our current price, sitting there at 77 cents, is just floating. It's way, way above the all pools floor at 31 cents, and even further from the base floor down at 22 cents. This isn't feelings, this isn't hope, this is just math. So how big is that buffer really? Well, the current price is a staggering 250%. That's 3.5 times higher than the base floor. That is just a gigantic cushion. Okay, but what about the more conservative measure, the all pools floor? Even then, we're still sitting 148% above it. That's still a 2.5x multiple. The gap is still huge. Let me put that another way because this is kind of wild. For the price today to even touch that all pools floor, it would have to crash another 60% from where it is right now. Think about that. That's the scale of the defensive layer we're talking about. Okay, so the numbers, the math, the on-paper stuff looks great. But that's just theory, right? What happens in practice? How is the system actually doing under all this pressure? Well, this is where it gets really, really interesting. This is the question that matters most today. It's easy to design a system for a rainy day. But what happens when the hurricane actually hits? How are the defense pools really performing? And here it is. This is the biggest, most important piece of data for today. On one side, you have the eSHARE pools. They're depleting. Okay, that's what we expect. They're on the front lines doing their job. But then, look at the other side. The USDC pools are actually growing. And we can put a number on it. The USDC pools saw a net increase of $230 today. Now I know what you're thinking. $230, that's not a lot. And you're right, it's not a huge number. But the direction is absolutely everything. In the middle of a market apocalypse, our reserves didn't just hold steady, they actually grew. So what does this actually mean? It means the entire real yield thesis, the core idea of this whole thing, is being proven right now, under the harshest conditions possible. The yield engine is pumping USDC in faster than the defense system is spending it to support the price. Yield in is bigger than defense out. That, my friends, is what sustainability looks like in the wild. Okay, so the system is holding up incredibly well today. That's fantastic. Now, with that confidence, let's look ahead. Let's talk about the forecast and the cliff. All right, here's the release schedule for the next 7 days. You can see it's a pretty steady flow, but then there's that bigger chunk of over 22,000 Plazm hitting on day 7. If you add it all up at today's prices, we're looking at about $67,400 of potential sell pressure coming over the next week. The big question is, can we handle that? Well, our defense pools right now have about $64,500 in them. You put that up against the $67,000 in pressure, and you get a coverage ratio of 96%. That means we have enough firepower right now to absorb almost all of the new supply for the next full week. Okay, let's zoom out one last time. We all know the big one is coming. Day 78. It's now just 15 days away. the final massive token release. Now here's something kind of weird, a strange silver lining to this whole market crash. When the price was up at its peak around $1.58, that day 78 release was going to be about $3.6 million of pressure. But now it's 77 cents. That same number of tokens is only worth about 1.73 million. So the actual dollar pressure we have to absorb from that cliff has been cut in half, down 52%, just because of the price drop. Okay, let's bring it all home. What's the final verdict for day 63? How do we sum all this up? So, to recap, 1, the market is terrified, but that's a macro thing, not a us thing. 2, Plazm is sitting on this massive 148 to 250% cushion above its floors. 3, the system is working exactly like it's supposed to under stress. And 4, the absolute critical insight. The real yield engine is so strong, it's growing our USDC defense funds even during this crash. So the verdict for today? It's simple. The cushion is solid, and the yield engine isn't just theory anymore, it is proving its value in the real world, right when we need it the most. So, I'll just leave you with this one thought to chew on. When you see a system go through an absolute firestorm like this, and it doesn't just survive, it doesn't just do what it was designed to do, but it actually gets stronger in its core reserves, what does that tell you about how resilient it's going to be in the future?